Hello, everybody, and welcome to day 8 of our Forex trading journey together. Hope everyone's having a beautiful start to your day so far. And today, we are looking at gold for the past 45, 46, 47 minutes. There hasn't been an opportunity until right now. We could see that we have our down arrow right over here that indicates that, hey, we're going to be looking for a sell trade as soon as this candle closes right here. So we're going to go ahead and do just that. And we could also see, okay, our equity is somewhere around the ballpark of, let's make that a 127.50. That's fine with me. 127.50 just to make it nice and even for us. And again, we talked about how come that particular equity was down compared to our last moments that we were on our journey together back on day 7, and that's because of the swap fees. And again, the swap fees, which are indicated right over here on your trade terminal tab. And of course, if we want to zoom or if we want to look at the more information, we could definitely do that. But as far as the swap fee goes, that is something the broker charges for every day that you hold on to a trade past the 5 p.m. Eastern Standard Time hour. Essentially, that is when the market closes and transitions to the next day. So the broker charges you a bit of a fee for that. But in the grand scheme of things, the way that we plan on trading, those swap fees in the long run will not hurt us in the slightest. So with that being said, we are looking for a sell trade right here. And so we are going to go ahead and wait to get into the sell trade shortly. But I do hope that everyone is having an amazing day so far. We are almost done with the week. This being about Thursday, we've got one more trading day to go before the markets close for the weekend. So I remember when we had last talked, and before we go ahead and we talk some more, let's go ahead and let's just get into this sell trade right here. Boom. Now let's see why the arrow popped up for us. That down arrow right there. Exactly how come that popped for us? Well, we go ahead and when we look at the trend so far. So let me take my handy dandy pen. We could see that there has been a particular resistance right here. Oh, and we have a horizontal type line tool for a reason, Jordan. Let's just do that. Right. So we can see that there has been a good support good resistance right here that has not been broken yet. Just going to the last past 5, 6, 7 hours. And we could also see that there is a bit of a downtrend that is forming right over here as well. In fact, we even do see some resemblance of a bearish market structure. And what I mean by that is we could see that not only is there resistance right here, we could also pin a resistance right where the down arrow was formed. So let's go ahead and let's just move that just a little bit more down here. Okay, that is beautiful. Yep, we could definitely see that there is a resistance right there. So all in all, so far so good for that sell trade. And again, we are going to accept where this trade goes, whether up, down, sideways, back to Mars, back to June. As long as we have our plan in place, we are going to be all right. So for those that were back on my last call, right, we had talked about the circle of anxiety, right? So remember, I had this big old circle right here, and then I put in a circle of anxiety. And we had talked about some of the things that we want to go ahead and look out for as a trader. One of them being, we have about the drawback, and then, looking at the 1 minute time frame, and then we were looking at closing the trades for a little bit of profit, holding on to our losers, and then revenge trading. Now, what I also want to go ahead and I want to also talk about is I would love to get into the next portion of the circle of anxiety, which is, let me see here, where is my arrow? There it is. So again, if I'm drawing this arrow right here, if you had drawn that particular circle of anxiety illustration that I did on day 7, if you've not checked out day 7, check out day 7. Go ahead and follow along still the circle. Pretend you still have that up and we're still following along. But the next part of the circle of anxiety is, do I get into this trade? Now, this comes especially after a couple of losses. I've experienced this many a times. Actually, here, go ahead and I'll pause for 5 seconds. 1, 2, 3, 4, 5. So we've talked about the circle of anxiety. And with this circle of anxiety, or getting into trades, right? So with do I get into this trade? That question right there, it's more so and I'll just delete this since that'll be a little too much of an eyesore for me. But do I get into this trade? It's more like I've taken so many trades, or I've taken a couple of trades already today, and I've lost them, even though I believe they were going the right way. Now I see another grand opportunity. Everything looks right. Do I trust myself to take this trade because I've already lost 2 trades? Because I know that losing trades, it does not improve the mind of a lot of us, and especially if we're beginning, our what's the word I'm looking for? Our perspective of the forex trade market is so volatile, just like these markets before us when we're starting out, right? We're riding these highs, knowing, whoa, look at this golden opportunity. Hey, I just made a couple of trades. Like now my confidence is skyrocketing. Oh, I lost a couple of trades. My confidence went down a lot. Oh, I lost a couple more trades. My confidence is really going down. Oh, I've won a few trades, but what if I lose those trades again? And it's a more so a self-fulfilling prophecy of ultimately backing away from the trading game. And so what I encourage everybody to do, and specifically, do I get into this trade again? Well, as we could see, and I know that for me, it's taken experience. It's not easy. But what I would recommend everybody to do is to keep trading when you see the opportunities right in front of you. Again, there are times where I know we're not going to take a trade. There are times where I know I'm going to win trades, I'm going to lose trades. I have a very mechanical strategy that I've laid out before on many of on the days so far together. And so having that particular mechanical strategy in mind, it does not allow me to feel the emotion of, oh, I don't know if I want to get into this trade again because of what happened the last time. Because the last time doesn't necessarily matter to me. I know what works. I know, or let me back that up. I know in my mind what works for me. Now, what may work for me doesn't necessarily work for you. Again, we all have different goals here, but the idea is that I'm showing each and every one of you how I trade so that you can get a good foundation of how not only you can trade, but how you can enhance what I'm potentially doing and make it your own. And so the question of, oh, do I get into this trade? Well, we have to answer that question, yes. And we have to break through that inner self-doubt talk, and we have to let that trade go, and we just gotta let it happen. Because most of the time it's those trades that get us back into the swing of things rather than not. So with the circle of anxiety, certain, again, those patterns that are going to repeat themselves, the 90 to 95% of trades going into the negative, like that first anxious thought, then the next anxious thought going into the 1 minute time frame and doing the play-by-play announcer type, then the third situation, which is to close out the winners at very small profits. Number 4, holding on to the losers when we don't need to hold on to the losers. Number 5 is revenge trading. And number 6 is, do I trade again? That right there is a perpetual circle of anxiety that will keep going and going and going until it'll drive you mad. So what I would recommend to do is to watch out for those signs. Those signs are going to happen, and do your best to make sure that you can move forward in the right direction. Now, again, as I talked about before, certain patterns repeat again and again. And we want to learn to base our decisions on understanding of those proven patterns. So, what does that mean to us? We recognize that right now we are in a bearish trend. Even if we went ahead and I zoomed in a little bit, right? Even if I zoomed in a little bit, we could see that we're in a very much a downtrend. So, what does that mean to us? We're going to be looking for sells until proven otherwise. If we were in a bullish trend, we would be looking for buy trades until proven otherwise. And when we stick with this effective approach over many years, and that's the plan, right? We're going to be doing this together for many years. And I mean, I not to pat myself on the back, but I am 27, so I'm confident we'll at least have 20, 30, 40 plus years of footage. If I'm being ever grateful to ever be in this particular role. And so our probability of success will increase massively as we keep doing this. And not just my success, right? The reason I'm just recording these isn't, to make you see, oh, look at this guy, look at how he's trading. Oh, look at this. No, no, no. It's to help you guys understand that this is possible, that you guys can do it too. We can do it together. We can do this. Like, that's really why I'm doing these, right? And what separates the money masters from the crowd is this ability to find a winning strategy and stick with it. So the odds are always strongly in their favor. And that's what we're trying, and that is what we're doing together, is we're becoming money masters together. We're becoming master investors together. And so as long as we follow the strategies, and yes, there'll be potential tweaks along the way. You can't always have the master mindset without becoming the student as well. That's what makes an effective teacher, is to have both the student and the master mindset all rolled into one. That's how a great teacher becomes a great teacher. And so there might be tweaks here and there to the strategy based on the pairs we look at, or based on other things that appear in the future that we can't see yet because we don't have that crystal ball. However, as long as we have our foundation for our strategy and we stick to it, we're going to be absolutely perfect in this. We're going to be absolutely just fine. So we're going to keep that in mind as we go ahead and as we move forward through this journey. Now, let's talk about how to approach some things in the market, right? And how to some other signs that we could tell, if we're in a bearish market or if we're in a bullish market. So when any market falls by at least 10% from its peak, it's called a correction, a purely bland and neutral term for an experience that most people relish about as much as dental surgery. So let me break that down, right? So we've been in buys, we've been in sells, but for the longest time, if we go ahead and let's see here. I don't want to necessarily mess up this trade right here, but let's say that price is at 1686, right? So if I do 1686, grab my handy data calculator. Now, say that price was at around 1,854.60 for gold, and now it's all the way down to 1686. That is what's called a correction, because at that point the buy market has gone so far up ahead, right? There's been a lot of bullish momentum. The bullish market structure has been to a point where it climbed up to 1854. And now that it's gone all the way back down to 1686, that would confirm that we're now in a state of correction. Now, it's not going to be as important as we do the Forex trading, I would say, but it is a nice note to make because you will start to understand, especially if there are other trades out there where we may look at higher points of time or higher data time frames, that we know, okay, we could be entering a correction, bear, bull market. And again, it can only help us in being certain that we're taking the right trades in this situation right here. Now, let's say, right? So that's a correction, and that's not as strong as a bear market. Now, a bear market, when a market falls by at least 20% for its peak, it's called a bear market. So now, coming back to our 1686 equation, and we're dividing that by 100, and we're timesing that by 20, and we're doing 1686. Now, say that gold, or the price of gold, its max peak was around 2023. Then what we're talking about is a bear market. Now, the bear market, that's how we know that, we want to go ahead and we look for sales. But we don't want to necessarily be scared of jumping into a trade, especially if price has fallen down to a point where we knew in the past that it was a buy instead of a sell. We don't want to necessarily get scared in the change of direction right here. And if we think about it, right, let's go back to day 3 and day 4, because now I only allude to those days in particular because that was the best times that we were able to see that particular situation unfold. When we took and I believe both of these situations were buys, right? When we took those buys and they didn't go our way, the arrows disappeared. We didn't panic and say, no, we got to get out of the market entirely. No. What we did was we placed a sell trade on each of those particular situations so that we don't have any margin that's going out, right? We can see right now the margin is at 3.42 right now, and that's because we know we were in a sell trade. But if the arrow disappears on us, no longer confirming it's a bear market, then we know not to panic and just close all of our trades, but instead make sure we do the trades that are necessary to take the margin out of the equation. And of course, there's going to be a specific way to do that as soon as we get to that point. Now, the biggest danger out of a correction or a bear market isn't necessarily those things, right? But instead, it would be our own ability to be out of the market. So we're leaving money off the table because of the sudden change from a bear to a bull or from a bull to a bear. Being out of the market, that's the biggest danger. And so understanding that, there's a specific way that I look at that. I translate that to, okay, if the biggest danger is being out of these markets and I want to be in these markets, but I don't want to lose any equity, which is the fuel of my account, well, that's where hedging comes into play. That's where hedging comes into play so that we could protect the working capital that we have and make incremental gains along the way. Now, I'd like to go ahead and I'd like to talk about some what I like to call freedom facts. Now, these freedom facts are facts that will free you from all the fear and anxiety. We just talked about circle of anxiety just a little bit earlier. that dominate most people's financial lives. And we're going to go ahead and debunk some of those so that we can move forward to becoming the best trader that we can be. Some freedom facts. So let's talk about number one. On average, corrections have occurred about once a year since 1900. Does that make sense, right? Because let's face it. Not every bull market lasts forever. And what I mean by that is not, I'm not saying that, we don't keep going and going up and up and up and up. But no, for a bull market, we don't just go straight up and never come down. That doesn't happen. That's not realistic. No, what normally happens is you have the bull market goes up a little bit. Oh, now here comes the downward motion because of some news or something or whatever. It comes down a little bit. Oh, now it's going up a little bit because of some amazing news. Oh, it's going to go down a little bit because of some other news. And here's the thing. It could be about the news could be about here, it could be about the president, it could be about the wars overseas, it could be food shortages, it could be the dentist, it could be the doctor, it could be the barber, it could be our hair. It really doesn't matter. I'm not trying to be funny, but the matter of the fact is that, even with all the news that are going on, you have to understand there's always going to be an up and there's always going to be a down. There's never always an up and there's never always a down. It doesn't stay prevalent like that. And so going back to Forex trading, there's going to be ups in this market and there's going to be downs. We're going to capitalize on the ups when we can. We're going to capitalize on the downs when we can. But we also have to recognize that sometimes there are situations where when we try to capitalize as an up, that's the point where it goes down. When we try to capitalize on the down, that's sometimes a point when it goes up. And we have the ability to not only see that, but we're also able to utilize the strategy that's needed to make sure that we are protected in the long run. Okay. Now, corrections are just a routine part of the game. The average correction has lasted only 54 days, less than 2 months. Now, we're dealing with, of course, shorter time frames in the Forex market where, corrections may happen in minutes more so than days. But we definitely understand that, we know what to look out for, whether up or down, and the market can correct itself in the direction that it was going. We could either bear the brunt of it or we could take advantage. And the thing is that we can't control what we're going to do. We can only go ahead and just follow the bigger players that are putting the chess pieces together, and we just move the chess pieces and we move our own chess pieces around so that we can go ahead and capitalize on what's there for us. Now, as long as we know that what kind of storm we're in and we're able to hold tight based on the adjustments that we make, the strategies that we talked about already, it's highly likely that the storm that we're in will soon pass, right? There's going to be an opportunity for us to, climb back from seeing these negative numbers that we're seeing on the screen, which again, if we think about it, bigger picture, that shouldn't bother us if we know that the equity is the most important thing. And all we've been doing, not to say that'll happen all the time, but all we've been doing is increasing the equity amount. And so we've been okay based on that. Now, freedom fact number 2. All right. I'm going to give everybody about 5 seconds to copy that. 5, 4, 3, 2, 1. And you can pause this, which is why I'm giving you that pause right there. Freedom fact number 2. less than 20% of all corrections turn into a bear market. So think about it like this, right? If one, if the corrections that we see in the market happen once a year, and less than 20% of those particular corrections turn into a bear market, then what this is really saying is that these bear markets happen less than once out of every 5 years. I mean, it does make sense when we think about it. We think about the current pandemic that we're going in. We think about the scare that happened around 2013, 2014. We think about the global financial crisis in 2008, 2009. We think about and granted, I'm just talking about the events that I have personally lived through. I know about the Great Depression in the 80s and the 70s and all that, but I'm just thinking about what I've been through in my own lifetime. So again, pandemic, and then we had the crisis in 2013, 2014. Then we had the global financial crisis, and then we had the dot-com burst. So those were considered bear markets, 4 bear markets out of the past 27 years out of my existence. Yeah, that is definitely less than once out of every 5 years. Just doing the math in my head. Now, once we understand that, hey, the vast majority of these corrections aren't that bad, it's easier to keep calm and resist the temptation to hit the eject button at the first sign of turbulence, right? That eject button is just closing all these trades and just saying, okay, we're done. We don't have to do that. We can go ahead and we can move forward in the way that we want to, right? I have my plan. I know that trade went for $2 in profit. I could have easily closed that trade if I wanted to, but I know my plan is, hey, I'm going for 30 pips, come, and pardon my French, but come hell or high water. If it hits it, great. If it doesn't, well, I know what my game plan is. And I'm not going to, and I don't have to deviate from it if I'm confident enough to know that it works. Now, let's talk about freedom fact number 3. Nobody can predict consistently whether the market will rise or fall, right? Just think about it. Sure, we've been winning our trades, most of them, but did we have a few losers in those trades? Based on our strategy, absolutely. 2 losers in particular. Again, I speak to day 3 and day 4 because those were the times. And hey, this could be a loser right here for all we know. This could be. Do I want it that way? No, of course not. I want to see my equity grow. But I am also not ignorant of the fact that it could end up being a loser, and we'll have to adjust from there. But more to the point, prediction is very difficult, especially about the future. Nobody can consistently predict whether markets will rise or fall. It's delusional to think that you or I could successfully time the market by jumping in and out at the right moments. The only value of these forecasters is to make fortune tellers look good. I mean, I used to work for Charles Schwab, and we had TVs, and because we're big financial company, we look at CNBC. We think about these guys on Squawk at the Street and the Jim Cramers of the world, and I have very much a respect for them. They most definitely got to their position, right, because of how much time they put in. But when I hear people say, "Oh, buy this, sell this, buy this, buy that," "Oh, the world's going down, the world's going up, the global catastrophe," all this stuff, I'm like, guys. And Tony Robbins said this best: the news industry at this particular point in time is only to be a fear-mongering business. And I get it. Fear sells. You can't hate the player. You just got to hate. Yeah, I mean, don't hate the player. Hate the game. And the game of news is nowadays is to sell you fear. I can even go into, and I'm not going to get into political ideologies. This isn't important, but for those that know the news stations out there, Fox is to make you fear Democrats. MSNBC is to make you fear Republicans. Now, again, I'm not going into that debate right now. This is not the time nor the place. We're here to make money, not talk about politics. But we have to understand that the news and forecasters is to, as I quote, or as the book quoted, to make fortune tellers look good, and it's to scare you from these markets. Now, is there a bigger agenda at play with the news doing that, or CNBC doing that? I don't know. I'm not concerned about CNBC. I'm concerned about what the government, central banks, and banks are thinking about. What do they get from these news? And frankly, I don't think they get anything. I think their whole point is to go ahead and make sure that, frankly, that they are doing what they need to do in order to make the right decisions for their economy. That's really all they care about, right? That's all they really care about in the grand scheme of things, is to go ahead and make sure. Oh, dang it, I closed a little too early. That's okay. Yeah, that's all right. 29 pips, I'm not going to complain, but we won that trade, right? But yeah, I mean, we think about it. All the main agenda right here is to make sure that the government, central banks, their agenda is to make sure that their own economies, their own interests are protected in the Forex market by moving the market in a certain way. And if the news can help them do that, then in the eyes of these particular organizations, agencies, institutions, they're gonna be like, F it. let's do what let's use the news as a puppet for us to make these moves in the market. And so because of that, people feed into news, which just feeds into these organizations. And I'm not trying to be a conspiracy theorist, right? All we're really doing is that we're getting into these buys, we're getting into these sell trades. There's nothing more to it. I'm not trying to put conspiracy theorists or make you wear a tinfoil hat in your head. That's not my job here. But I mean, it is pretty funny. It is pretty funny that, a lot of, what CNBC does well, because ultimately what they do is spread the news that they need to in order to fulfill the agendas of everybody else. And it's a little eye-opening. if you really think about it. All right, everybody, we are back in the market. And so I do have to be honest. I did miss this sell opportunity right here. I was not paying attention, and I made a mistake. Of course, in life, things get a little bit busy, and that's perfectly acceptable to understand that that can happen. And we just have to own up. We just have to own it. Understand this move right here was missed, because this was a fantastic move, but this move was missed, and we'll have to move forward. Now, I do have another opportunity coming up. And of course, we can understand why this particular down arrow right here. In fact, let me go ahead and mark that up with my pen. We can understand why this particular arrow came into play. I mean, let's just look at the market right now. It's basically Sellsville. It's Sellsville, not Buysville, Sellsville in gold right now. And so understanding where the arrow is, we're going to go ahead and allow this candle to close, again, to make sure that that particular arrow stays there. We've already seen in multiple particular instances where the arrow that we were looking for has disappeared, and we had to go ahead and adjust. So we are going to make sure before we take any trade that 5-minute candle, which is about to close in about 2.5 minutes, we're going to make sure that it stays right there. And so while we go ahead and we wait for that candle to close, I believe we were talking about some of our financial freedom facts that we had essentially discussed. Freedom fact number 1, 2, 3, and now I want to go ahead and talk about financial freedom fact number 4. And by the way, these financial freedom facts, they come from Unshakable by Tony Robbins. We've talked about Unshakable by Tony Robbins plenty of times already on the multiple days that we have covered my particular journey. And I believe it's very, very, very important. That is one of the first books that I have read when I really started to open my mindset to now becoming a student, because I've been in trading since November of 2020, mind you. And I'm gonna go on this little tangent first before we get to the fact. But I have been on this journey since November of 2020, and from November of 2020 to July of 2021, I wasn't necessarily opening my mind to this particular type of, okay, I need to read books. I thought just watch videos and just wing it out on my own, do my own experience. And that's all I would need in order to move forward. But as we've covered some of the books so far, including what we're about to cover right now in this particular moment, we're going to see how important it really is to make sure that we are doing our due diligence in talking not only about this in what it relates to the sense of the financial industry, but how some of these tips, as we go through more books and all that important stuff, that can really help us grow as human beings too. And I was on a particular talk this morning with Dr. Luis Ariaza. I've also mentioned him a little bit on this show. Absolutely incredible gentleman. And he said something that was so important, so eye-opening, so powerful, that I thought to myself, wow, I don't want to I'm not patting myself on the back, but I now understand how important it is to cover some of the topics that we are covering right now. That candle is about to close in 10 seconds, by the way. And I definitely want to make sure that we go ahead and we cover that. So I see that that candle is about to close. It just closed. We're going to take that sell trade right now. Boom. That's it. Okay. We've just taken a sell trade. So we're going to let that trade play out. We only have about 25 minutes before the market closes. And we understand our game plan, right? We understand we just entered that trade. We know exactly how come we entered that trade. The reason that sell arrow popped up, right? And the factors behind it. Bear market. We're in the downtrend right now. We can even draw a trend line right here if we wanted to. Here, I'm going to use I'm going to try and draw a straight trend line without it being so chicken scratch. See? we're still in the downtrend right now, so that will help us with seeing that particular arrow. So we're going to go ahead and let the trade play out because of that factor alone. But we also realize when exactly we're going to go ahead and get out of this thing when we need to. We already covered our plan on doing that. And when we get to that point, we'll make sure to do this on the recorded stream with everybody. So with that being said, that trade is playing out. So let's go to financial freedom fact number 4. Now that is the stock market rises over time despite many short-term setbacks. Now, what does that mean for us in the context of the financial market? Well, we know that right now we're in a quote unquote setback if we're looking at it in the eyes of a stock market trader, but in the eyes of a Forex market trader, which is what we are Forex market traders trading the Forex market. And the ability of our unique situation is we could take advantage of either way, up or down. But the main point is that we can enter sells, we can enter a few setbacks with our trades. Go back to day 3 and day 4 if you don't believe me. And even within those setbacks, we're able to grow our account the way that we need to, just like the stock market is able to come back when it needs to. What is the most important thing that we always take a look at? What have I been preaching these past couple of days? The most important number on here, let me get the arrow, is equity. Equity is the most important thing that we only need to go ahead and pay attention to. Yes, the balance is fine, right? It's nice to see our balance, but we also understand that akin to the vehicle, right? The car analogy that I gave at some point earlier, I forget which particular day it was, but to bring up a refresher, in the scenario, the balance is like the gas tank. This is how much gas the account can hold if it wants to, but the equity is our actual fuel in the market. And as long as we maintain our fuel and we allow the fuel to grow, that is what's going to drive us to be able to make the moves that we're making right now. If equity goes all the way down to 0, that's it, game over. We have to then refuel and spend more money. And on this channel, we are going to do everything in our absolute power to make sure that does not happen. Now, we're not perfect. Can it happen at some point in the future? Of course. We're not going to think about it, but we also have to understand that we don't need to be perfect in this. We don't have to be perfect in the market. And what we've been building in terms of our risk management plan, we've covered those rules, particularly on the earlier days of the week, I should say, that allow us to ensure that we have our safeguards in place to make sure that equity going down to 0 does not happen. Now, the other thing that we're going to talk about that we also need to make mention of, the margin. What's another thing that keeps our equity from being stabilized is making sure that margin before we end every particular day. And mind you, we've got about 21 minutes before this particular day is over. We make sure that margin stays at 0. Then we walk away from our computer and enjoy the rest of our day. That's how we've been trading these past, including today, past 8 days. And I see no reason to deviate from the plan as of now, because that plan has been working consistently for the 8 days since we've been on this journey together, my friends. Now, let's come back to what this means. So I know that was a long tangent. Now let's come back to what this means for the financial freedom facts, right? So even when we take a setback, even when we take a loss, our goal, or what we've been doing so far, is that our equity and thus our money, and thus like comparing ourselves to the stock market after many short-term setbacks, we are able to rise. We are able to keep going in the right direction. Now, does that mean that equity is going to rise every day? Does that mean that equity for us is going to increase every day? Will we not take a little bit of a loss here or there? No, absolutely not. There could be days. We may not see that right now since we're playing with a very small lot size, and thus we are managing our balance pretty well with that small account lot size. But imagine when we get to those bigger balances, right? Those bigger balances are going to incur a few more costly swap fees, commission fees. Those drawbacks are going to hit just a little bit more. But as long as we stay solid in our plan, while there'll be bigger punches, bigger opponents, tougher opponents in the grand scheme of things, we'll be all right as long as we stick to the plan that we currently have in place. And again, I allude to this quote right here as being the most important thing that we can write down for ourselves to illustrate the fact of what our journey is going to look like together. The market generally rises, and we could think about the market in this sense as the perspective of the solo trader, our equity. The market generally rises over the long run, long term. So we might have a loss on one day, a loss on another day. But over the course of the long-term 8-day journey, it rises even though we hit a huge number of potholes along the way. Those potholes are the stop losses. Those potholes are the commission and swap fees that we may encounter. Again, a lot of that stuff is not under our control. However, what we can control is the way that we properly understand the risks, manage it well, and be able to grow the account the way that we want to. Again, I understand that right now my trade is in a little bit of a negative spot right here, but I'm not panicking. I'm not going through the wheel of the circle of anxiety where, oh my God, I have to look at the 1-minute chart and do the play-by-play analysis. Oh my God, I have to close this particular trade when I have a small amount of profit. Oh my God, I have to hold on to this trade even though I should know that I should stop holding on to that loser. Oh my God, I need to revenge trade because the market just took away from me because I know the market's going against me. We know all that is crap. But all that crap we're putting inside our head because we don't know what we don't know. Another powerful quote that Dr. Luis Ariasa just taught me earlier today. We don't know what we don't know. So we have to strive and seek for the things we need to know in order to move forward, right? The long-term trajectory is likely to be good, even when the short-term news is this small and the market is getting smacked. Oh my God, we hit our loss. Oh my God, we hit another loss. The trade didn't go the way that we wanted to. Oh, woe is me. That's the this small news. Yet the longer term news is that we've been growing this account pretty consistently over these past couple of days. That's the long-term news. So our long-term strategy works even when the short-term potholes are there. So we just got to be careful about what we do, how we do it, and we move forward in the right way. Now, this all powerful trends that we're talking about, what we're doing in the market, how we're increasing our profits, how we're getting our bigger balances in place, how we're increasing our equity. It's certain to continue as long as we keep that what I like to call inner, let me write this down. Our inner Forex trade. I'm gonna put this in quotations. Our inner Forex trade magic. And what does that mean? What's the magic? Our knowledge about the game. We talked about the knowledge about the Forex game. We talked about the rules in place. We've talked about the players. We talked about the agendas. We talked about how we can get her in the market. We talked about how we can win in the market. So that's one part of our knowledge. That's one part of our magic. Second part, our inner faith and belief. Now, I did talk about how belief, how the power to believe is not all that you need, or that's not, it's part of it, but that there's more to it. However, that belief and faith is still required in yourself, ladies and gentlemen. If we don't believe that we can succeed in this market, then this whole thing would be for naught. I would just shut this down. I'm like, I'm done. But no, we know that there's more to go on this journey. We know that there's thousands and thousands and millions and billions of steps. Don't even think about the money for a second. Just think about the steps we need to take together and how important it is to keep that inner faith and belief that we are walking down the right path, especially when things do get scary, because things are going to get scary. There's always things, not even in just in Forex trading, but in life, that are very scary. And if we don't walk in the path that we're meant to walk, because we believe our inner faith and belief is gone, then I don't know. Then what's the point? Right? What is the point? So knowledge about the game is one. Our inner faith and belief is two. And then number three, your why. Now, this is a very important thing right here. I believe this is the most important thing, number three, your why. Now, however that why can be, because again, my why for me is believing in, I would have the ability, I have the ability, I am the ability, affirmations, very important. I am the ability to generate unlimited wealth economically, physically, spiritually, socially, and emotionally, that I can give back to my family who's invested so much in me, to my friends who have invested so much in me, to the world, to put them in a better place, to see where they can go, invest in the world so that the passions and dreams and realities of those who may not be able to do it because of the almighty dollar. That's the why for me, to blow all that up in its face and allow people to achieve the freedom that they so desperately want, right? It could be so easy for me to make a course, make what I'm doing here on YouTube with everybody. It's so easy for me to just, instead of me putting it out there, just make a course and make people pay for it. It's easy enough for me to do. But how does that help the community at large, right? Now, I've talked about this. There are businesses that do that. I'm not here to downgrade those businesses. I'm not here to downgrade the people, because they have decided that their self-worth is, hey, if you want to learn a little bit, you're going to need to pay for it. And that's absolutely perfect. As a business mindset like that, that is absolutely fine. But for me, I feel that there's a larger purpose to all this. If I could teach what I could teach and make it simple enough, well, then we would all have the tools and the resources to delve into this maybe a bit more than we thought was possible. Delve into other people that may need to know this information, but they can't, because they don't know where to go. And I know by taking this journey, there's a lot for me to learn still, right? As a teacher, I understand that being a student and a master at the same time is important for me to do all this. But if all this, right, if all of what I'm saying right now is concentrated on the why part, and that's part of it, and I've got this part down, my inner faith and belief and knowledge about the game, then boom. That is the ingredient to your inner Forex trade magic. And I am confident that those that are watching, that have continued to watch my videos, you have it in you. You definitely have that within you. It's more about extracting it and for you to put it on display that we need to work on. And we're going to do that. We're going to extract that magic from you day by day. You know, the most important thing about me doing this particular series where I do day 1, day 2, day 3, day 4 is to illustrate that you don't have to get it all done in one day. You can take as many days as you need. Frankly, I think I mentioned this before, I'm probably going to do this until I'm 200 plus years old, even more. Some people might laugh at that and say that's funny, but no. If I have the passion, the energy to do it, and the old adage goes, if you're always growing, if you're not growing, you're dying, then why not? Why can't I do this for as much as I want to? If there's so much to teach in this world, and there's so much to do in Forex trading, and there's so many people to get this out to, how come I can't do this for as long as I want to? Right? And that's all part of the magic. Now, only got a few more minutes before we need to wrap our trading up for the day. This candle right here is about to close in 2 minutes. I'll let that play out. Whether it keeps going down, positive, if it goes positive, negative for me, it doesn't matter. We stop it once the candle closes, then we end the trading for the day. That's how we've always done it. And there's no reason for me to deviate from that solution. Now, let's go ahead and let's talk about specifically, because I don't want to go into another I'll leave the next freedom facts for next time. But let's talk about what's so important about doing this now, even if we are not ready. You know, the state of perfectionism, as we call it. Oh, I'll do this when this all happens, or it's not the time yet. It's like, no, it's right now is the perfect time. If you don't have, okay, I'm trading with $100 in my account. That's what I started out with. If you can't do it with $100, that's fine. Because so far, we haven't really lost any money in this market with $100. Now, while it'd be a little bit more risky, you could do it with $50 easily. You can start a trading account with $50 and do exactly with what I'm doing. Do you have $50? And if you don't, then I don't want to downplay that on you. You know, we all have different situations. We all have different seasons, and I know I've been in many situations. I didn't have that. So, but everyone has a demo account. You can all do this on a demo account. I'm sorry, I got about 6 seconds. 5, 4, 3, 2, 1. Okay, here's how we're going to do it. That trade did not get 30 pips, so we're not going to close that trade, but instead close the most profitable sell trade. And now our margin is down back to 0. Our equity stays right where it is, and we're done. So let's review what we've done today as far as our trades are taken. Our equity when we started out was $127.50. Now that number has increased to $132. That's a $5 gain in the equity. That, I don't care if it was $1, 50 cents. The fact that that equity is better than it was the day before, we've won the day. We've won the day. Now, people might look at my draw, the balance, and they say isn't that a little concerning? And I say to them, again, the most important part we have to take away is the equity. The balance can always be recovered. The balance can always go back in the right direction. Our equity will get to a point where it comes back to where the balance is. But what we want to focus on specifically is just the equity for right now. Just the equity for right now. And so as we move forward, we're going to keep getting that equity moving in the right direction as best as we can. So what I want everyone to do for homework is I want you to start taking trades, and I want you to at least come up with 2 good solid reasons that trade you took was one that you believed in, right? Whether it's, oh, I took this trade because it was in a downtrend and I noticed that it was at a lower high compared to the market structure, right? But if there's two solid reasons, perfect. That's all that we don't need to go too deep into all this stuff, right? But it's going to be important as you move forward to understand how those trades are being executed so that you can have the confidence to keep doing the same thing over and over and over again. It's a very duplicatable process, what we're doing right here. I know that if I can do it, and the universe is not a respecter of people, if the universe is not a respecter of people, then everyone can do what I do. I'm sure of it. And if the trader path, the trader lifestyle, the trader career is what you want, then these are some of the things that we must do in order to keep the fans flamed and for our expertise to keep growing. And so with that being said, this has been day 8 of the Forex trading journey. I thank each and every one of you for listening, and we'll see you tomorrow for day 9. Everybody, as always, have a beautiful rest of your day and happy trading.